Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today, and we can finally begin. And we will open the webinar with the previous questions as we see in here. And we will also have somewhere to write down our notes. Okay. And we will simply paste the first question that we've got. Okay, and the first question is, what is trading diversification and how to use it? Okay, great. So what is trading diversification? This is basically, instead of trading only one instrument, which could be, if we click on the commodities or maybe even the indices, and we scroll down to find NASDAQ, which is right here at the bottom. We're going to click it, and then we're going to extend the chart, and maybe we'll display another instrument. Okay, we'll begin with this one, and then we'll have another one, since the logic way to explain diversification is basically analyzing two instruments, basically trading two instruments. It doesn't have to happen simultaneously, but the idea here is that we're not trading only one instrument, but two. What are the benefits of that? We're going to speak about it in a moment. But first, we're going to click on the time frame and we're going to choose, we are on week, okay? So we're going to click here on the column price to better customize the chart and maybe zoom out a little bit. This way we are good to go. Okay, and NASDAQ seems like it's quite in consolidation at the moment. If we switch to days, we see that it's around those levels. We can even place it like this, and then we can see for so many days that NASDAQ is around those levels. Okay, we'll switch back to weeks, but we can obviously see that if we see the long-term trend, we place here let's go with a trend. Okay, let's keep it simple. This way we can also see the percentages. Okay, and with a trend line, we're going to click at the bottom, we're going to click at the top, and then we get the changes. As we can see, 40% from April. Okay, quite insane. If you notice, it's on the long term, it's quite bullish. This is less than a year. Yeah, we can all see that. And okay, with this in mind, this makes me want to take a buy, since I believe that NASDAQ can carry on up. So I can click here, either buy or sell, to open the order entry. And in here, okay, it's already by default. What I like to do is to set it to default and then to increase to what I want. Now, since I'm using NASDAQ and it's among the indices, and indices, as the value is greater, can move typically large numbers. So what I can do is I can click here on the indicators, then I can in here and type to filter, type AVE for average, and then select the ATR, click and drag it to the right. In here, I'm going to set it to 10 for 10 weeks. And with 10 weeks, we can see that this is approximately here. So let's count together. 1, 2, 3, 4, 5, 6, 8, 9, 10. 6, 7, 8, 9, 10. This is here, but here excluding the current week. So that makes it 10 for us. And this is the particularly the big candle in here that we can see. And this is how the ATR, this is how far the ATR is getting to. So we can see that the ATR is giving us an average of 890. We can see that it appears here in red. Maybe I'll change it to another color like this so we won't be confused. And now it's in yellow. So the yellow represent the ATR. ATR is 890, 40% growth. This makes me feel like NASDAQ can move another 1,000. If this is the average per week, I believe that it can move even 1,000 or more based on this average. So I'm going to click on the take profit, and I'm going to also click on the stop loss. And in here at the execute when price hits, this pending order behaves as a pending buy or sell. This allows me to automate my entry. This is very similar to using a buy limit or a sell limit in MT4, or yeah, MT4 and MT5. Now I can set it to an exact price if I want. So let's make it a flat 23,000, and at the take profit we'll make it a 24,000. This way we have 1,000 in difference, and same in here the other way around. So we get 1,000 and 1,000. We're gonna maybe okay, we'll do it together to fix the ratio here, but this is how I would like to keep it for now. So this is one position. We're going to quickly put it in our sheets. We're going to type here NASDAQ, and we're also going to put here the entry 23,000. Take profit is 24,000, and stop loss is 22,000. Okay, we are with a buy, and that buy is with 0.01. Great. So this is our position 1. Great. Great. Now, how do I diversify? So we have it just like that. We have another instrument. Let's pick. Maybe we'll click on. Let's look for platinum, which also has been very interesting in the past few weeks. We can all see, right? Now declining, but let's again, we click here on the trend line, click at the bottom, click at the top, and then we see another insane growth of 70%, says 70% since April, which also makes us think that this is also a buy. But you can see that NASDAQ is still displaying the previous instrument. So what we want to do is again click on the buy to display the correct one, and again change the lot size to 0.01. Excuse me, just this. And now we can see that with we also have the ATR already applied, by the way, which is also 10. We can extend it, change it if we want, but at the moment we can see that 90 is the average range per week. So similarly, like we did with NASDAQ, we're going to also click here to bound the entry, automate the entry, and enable both take profit and stop loss. And in the execute when price hits, we're going to flatten that price to 1,370. The reason for that is, as you can see, this is roughly here, and we're also going to change the numbers. Okay, and the reason for that, guys, is as you can see, last week this price was triggered, and I feel that at the moment, since platinum is still bearish and this is not a part of any trend, this individual candle, I still have a reason to believe that platinum can flinch down similarly like it did with the previous segments. And if it does, I would like to enter here instead of at the higher point. So for that, 1370 will make it 1470, which is $100 higher. Same thing with the stop loss, and of course we will modify this ratio to be better. We'll also increase this to be 0.1, so we get the same numbers as we had with NASDAQ. We'll also write here platinum, and this will be our second position. So we have NASDAQ, we've got platinum here. We'll do it like this, and in the entry, as we wrote, okay. Okay, so at the moment, let's also write here possible result we have. So this is possible profit is 1,000. Okay, same thing with currently. It's the same thing with the loss. And we've got this. We've got that. Okay, of course, we're going to adjust it to be a bit more reasonable. And at the moment, as we can see, we're looking at 1,000 and 1,000 with NASDAQ and with Platinum. We can click here on the layout, change to 2 charts, and then we can see both of the charts. Maybe we'll make it like this, a little easier to. Okay, and we don't have ATR in here, so we will do it. Okay, set also to 10, great. And now we have, and now, okay, we have to also know, guys, that when you're modifying the multi-charts, at the moment it's on 2, you have to make sure that you have your indicators, you have your selected time frame. You see that we have here 4 for NASDAQ. This can be in a week for NASDAQ, okay? So we're gonna click here on 1M, change, scroll down to W1, and now we do get the numbers correctly. 890 that we saw earlier. Now we're looking at 2 positions. We have the first position we had at the bottom with NASDAQ here, and we also have Platinum in here. One more thing I wanted to also jot down. That was the margin impact, and the margin impact is imperative for me to know, making a comparison of which instruments to trade. So we'll click here, we'll quickly click here on buy, we'll set the numbers that we had, and now we see that the margin impact here, margin impact is 1,439. Okay, let's make it a flat 40. Okay, and in here, the margin for NASDAQ is, just a second, okay, is 1,150. I'm going to tell you guys that the margin impact is the necessary amount for me to open the position. This is why I need to know it. This is why when doing any kind of diversification, this is something I should consider. Otherwise, I can be in a point that I'm doing analysis, certain levels of analysis, and I want to launch the position, but if I don't have the available margin, I won't be able to do that. And of course, the more positions I'll take, the bigger positions I'll take, the more margin that I need. Okay, in this case, making this comparison, for instance, if we would like to add even another one, just for the sake of the discussion, not anything too crazy, but let's try and have a third, which will be, let's say, crude oil. Okay, and with crude oil, we'll also click buy or sell to display the right one. We'll also apply the ATR and set it to 10. And we can maybe even roughly have some basic support and resistance, change it to also to weeks. Okay, and similarly, we have roughly $10 in between support and resistance. It's a little funky with us, so we're just going to set it through the coordinates. Here we are, and this actually does seem like, okay, we'll stay with the buy. We'll stay with the buy. Just trying to convey here how diversification works. So if, for instance, we would like also to take a position with oil on top of the previous positions that we had, and with oil, we're also going to automate the entry, set it to 66.5. Take profit will be 76.5. and this will be 56.5. And then we're looking at the same 1,000 that we saw with Platinum and Nasdaq. But we should remember the last thing we wrote down, which was the margin impact. And if we can see in here, the margin impact in here is 667. And we're still looking at the same 1,000 here. Although we can notice that the ATR here is 5.6, and we targeted a take profit in the stop loss double than that. So this could take 2 weeks. But if I'll also write it down the same way I did with Platinum and Nasdaq, let's make that comparison together. Just a second. Okay. Entry in here is, this is by the way, as you guys saw, with the most basic form of analysis. I didn't go through the fundamentals. Just a second. I haven't applied any other indicators that I could have, and all kind of additional actions that I can take along the way until I actually open the position. But at the moment, just a second. Okay, but at the moment, what we're focused on is the margin impact. Okay, so basically what's happening here is we've got 3 positions to make this. This will be the third, and we've got 3 positions, both top positions are more than 1,000, which means that in this case I'll need to use 14% of my available margin currently, and in here a little more than 11%, 11.5%, and in here 6.6%. Okay, let me show you how to calculate this. So basically I can take the margin impact, divide by balance, times equals, okay, times 100. So basically what's happening here is equals a simple percentage calculation, 667 divided by 10,000, divided by, okay, that gives us a 0.0667 times 100 equals, we'll do it together. Okay. Right. So with this in mind, why does it make any difference if I'm taking this position, or maybe I'll want to take a bigger position with Nasdaq like that? Maybe I'll make it 0.10 just for you guys to see. Too much. There we are. No. Okay. In this case, we can understand that all of this is accumulative. It means that another position in another position means more margin that I'm using. So when I'm selecting which instrument to trade and how much margin I'm planning to use in every position, I need to make this comparison, because when we are diversifying, we basically we have more than a single position. So we need to take it into our consideration. So this is basically how we're using diversification. You should know that this ratio here is called a ratio of 1 to 1. What does that mean? It means that the profit and loss that we're expecting are the same. Sometimes I have tendency to change this ratio to something else. Why? Because at the moment, if all of my positions are making profits, we can make 3,000. Okay, if all make profits. If all is profit equals, we can make 3,000. If all is loss equals, we can lose the same amount, right? Now, if we change the ratio here to 1 to 3 as an example, so what will happen is, because in here we have only one unit, one indice of NASDAQ, and one indice times 1,000 is 1,000. What I can do is I can set, instead of $1,000 away, I can set my entry to be only $300 away, which will make it 22,700. In this case, I will only lose 300. Okay, I'm gonna do the same thing with platinum also. So instead of 100, it will only be $70. So this will make it a flat 300. And then in here we can lose 300. Great. And in here we're also gonna do the same thing and divide this 10 by 3. And that makes it $3 away, which will be 63.5. This makes it 300. Okay, now to test that out, we're also going to place the numbers in here. So we had an entry of 66.5. Our take profit can stay the same, and our stop loss will be like that. So now what we've got is a ratio of 1 to 3. Okay, great. Now this has changed. How is this? What's the change? So if all profits, we still make 3,000. If all loss, we lose 900. Okay, but if one profit and 2 loss, what we get? 600 loss and who knows? 1,000 profit. Okay, so there is a difference changing the ratio, and somehow I can balance and create harmony in my strategy. This way I can keep moving forward even if some of my positions has losses, as long as I make more than my losses. I know that it's a bit advanced and it's a bit complicated, but explaining this quite requires me to add this little addition, and I hope that it helps. What I can write in here is basically that diversification diversification is giving us the ability to trade more than one instrument, and in case some of our positions makes profits and some of the positions have losses, we can balance to still make progress. Of course, again, as I showed you, this is the most basic form of diversification that I know about, because we're limited in time, and we're not going to also do analysis and things like that, because this question alone will consume the whole time from the webinar, which we don't want that. And like I said, the webinar is recorded. You can later on go to YouTube, watch what I've explained again and again until you understand. Okay, can AvaTrade assist me with making a? There we are. This is exactly what I wrote here, right? So this is not a specific trading plan, but as you can see, those segments in here can easily be implemented into an Excel sheets or whatever else you want. And right in here, we've got the strategy written down, what positions we take. And to make a plan, all we have to do is to type a few basic ingredients: target, time, movements, and units. And with those 4 ingredients, basically we can set a target of, well, based on that, we can set a target of 1,000 during 1 to 2 weeks. Okay, the movements in here is various, so we're not going to write down the whole diversification. We're going to type whatever is necessary, and in here, whatever is necessary as well. And this 4 ingredients can be attached to each of the positions we're taking. Then we can follow and keep track. Where are we? How far away we are from the goal? And based on that, we can custom a plan fit to our needs. This is again a basic format to just show you how to write things down. This is nothing professional that I'm advising you to do on your daily trading, but this can give you an idea where to start. And another thing that I can recommend you is to contact your senior account manager. Contact your senior account manager, because he can then with you specifically help you find a plan that can go with your lifestyle and help you to get the best result. Okay, so this is what I will also write here in the answer. Your account manager can assist with making a plan and to help track your progress. With making a plan, why is it complaining? Maybe making a trading plan. Okay, it's still complaining, but okay, I guess we'll leave it like this. Let it complain. All right. What is the best instrument category to trade? Okay, I just love the questions that begins with what is the best. I mean, what's the best? Everyone has their own portfolio, and you can trade whatever you want and make profits with all instruments. We just analyzed different. This is one of the energies, this is one of the indices, this is one of the commodities, one of the metals, in here the agriculture. They're all various, they're all great, but they're all also, it doesn't really, okay, how can we answer this question? What I can actually say is that each group has its own fundamentals, right? Commodities, for instance, inside commodities, you have commodities like gold, platinum, silver, things that can be considered as safe havens and are fluctuative much more when the economies change. You've got other things on the same categories like corn and cocoa and coffee that during the wars are more fluctuative, and because of the transportation and the difficulties to basically to transport and to trade physically those things. And indices, as an example, is a group, as you know, and for people who don't know, each indice is actually a group of stocks, which means to analyze an indice, to analyze NASDAQ as an example, if I know about drastic changes inside the stocks that under NASDAQ, maybe it will give me an idea how to analyze NASDAQ itself, right? So if we look at cryptos is, we can see crypto here, the biggest prime currency, I would call it the Bitcoin here, is breaking all, let's change it to months, it's breaking all records. That's just insane. I mean, if we click here on the, click at the bottom, click at the top, this is just 650%. Yeah, I hope you guys can see what's happening here. And this happened during 2 years. Okay, this happened during 2 years. So each, and also stocks is an example. So stocks, if I want to analyze stocks, I also need to know that in each stock that I have, has its own fundamentals, regardless the economy. It has its own reports, it owns products. We can click in here on the Globy icon and then on the market buzz, and we can get specific information for each stocks that we were analyzing. We'll give it a moment. Okay, and for instance, if we'll take Morningstar as an example, we can see that Morningstar is at the moment we have either the acquisition completed or the earning announcements, and we can get more specific information about that. Now, each of those categories are great, so there is no way for me to write the best instrument, specifically indices or currencies or commodities or anything like that. It's not going to be appropriate. But what I can write here is each different instrument category can share in common. How can I write it down? Can share in common the fundamentals. Okay, as we spoke about the stocks that has their own earning seasons and their own products, their own announcements and indices, we understood that it's also related to the stocks, but it's also related to the economy and to the interest rate and to various things. Same apply with currencies, by the way. Forex is driven by the economy decisions. Forex is the currencies that we're using today. Everyone is using, right? So of course, currencies are fluctuative anytime that the government is making a drastic change, right? So each category has its own fundamentals, but they do share something in common. So for instance, if I'm analyzing USD, AUD USD is an example, and I know that the interest rate in Australia and in Canada, they're both having different decisions regarding the interest rate, and I'll know more about it via the economic calendar or any other source. Basically, it allows me to analyze much more than that. Why? Because now I know about the Aussie and I know also about the CAD. So any other currency that I will analyze versus Aussie or versus CAD, I already have so it can be related, but there is no best. There is no, to my opinion, maybe someone else can say, listen, currencies is the best thing in the world, but I think that everything is the best, okay? So what is the best indicator to use? Same in here. There is no best, okay? Everyone has their own. The same way we have different type of food, right? Sometimes we like Asian food, sometimes we like Mexican. What is the best indicator to trade? The best indicator to use is the indicator that fits you the best way, right? So as you guys know, I like my three favorite. Just a second, we'll choose something else. We'll go with coffee. Is it still okay? So coffee is recovering. Okay, it's recovering. Let's clean what we had in here. And the best, well, not the maybe those are my best, but not something I would recommend for everyone is the entitled best, but Bollinger Bands, RSI, and with even the default deviation still I can work with. So let's make it Let's keep it like this for now. Okay, it's very colorful. Bollinger Band's relative strength index and average true range. Those are my favorite three, but I cannot declare that they are the best. Not near that, because some people might find it complicated, some people might find it not useful. So those are my best. And also the ATR that I use primarily is what I like about the ATR is that it's changing accordingly, and I can summarize the range of how far back it goes. So if I see a specific event along the way and I would like to avoid it, I can just choose a different range and exclude it from my calculations, which to my opinion is great. Okay, so in here in the answers, I can write what is the best indicator to use. The best indicator to use depend on my trading style, my available time. And the reason for that is because if I'm using, for instance, the RSI, okay, I'm using the RSI and at the moment I'm analyzing minutes. Will the RSI help me analyzing in minutes? Maybe, okay. But if I analyze hours or days, maybe I can find it a bit more useful. So depending on my trading style, depending on my available time, depending also on my level of experience, right? My level of experience, I can choose the best indicators for me to use. And I'm also going to write here that I shouldn't have 20 indicators applied on the chart. So sometimes I would like to use them separately, like to use the indicators separately and sometimes together. As you know, the RSI and Bollingers go along together. They can, okay, so that and sometimes together to avoid having a chart that is too colorful and confusing. Right? For instance, if I would apply even more than what we had, so we had this and we had that. If, for instance, I would also add CCI and ADXR, then look what happens to the chart. Okay, so we don't want to have too many, it's too colorful chart. We just want to know what we want to know, and when we know what we wanted to know, we can either jot it down and carry on, or we can use a different indicator. Okay, but the point here is to keep the chart clean and get the information that we want. This way we can get the number that we wanted, write it down like we did in here, and that's it. Okay, so that's what I wanted to say about the indicators. They're all ones for some reason. Okay, yeah. Now the next bit, as I've explained, is those links here to save you the trouble to find it by yourselves on the website. The first link here is AvaTrade Education, and I'm just gonna paste it for you guys on the chat. Okay, this is for additional education. The second, the help center, is exactly what it says. It is to help you find more official kind of queries and questions that you can find the answers on the website. The third one in here is the real account, for real account if you're still on the demo. And lastly, the academy, which I'm also going to show you how to access from the website itself. but still I'm going to share with you the link anyway. Let's see if it works. It does. Okay. So how do we oh, and one more thing. I also want to give you guys the special promotion code, the Q&A benefit, to enjoy one-on-one premium market review with your senior account manager. To my opinion, if we spoke about practical assistance, this is the best practical assistance that we can receive. A human being who is an expert in the market, and I can ask whatever questions I want live on the spot with me looking at the charts. I think this is one of the best things that I can get. And now let me show you just a sec. And now let's see how we can get to the Academy from the website. So this is the web trader. The web trader is embedded in our website. To get here, all you have to do is just to log in with your email and password. You don't have to download or install anything. And to get to the Academy, I'm going to show you in a moment. Let's just do this. Okay, let's still maybe now. Okay. To get there, there are two ways. One of them, we saw the link. The other one, right here at the bottom, we've got the chat. And on top of that, we've got the tutorials. So Academy is right underneath. If we click on Academy, we get to here. And in tutorials, we get a nice library of tutorials right here in the website without even clicking on a link or anything like that, right here on the spot. Full, you can see videos with, in a moment, with translation. And if we pick something else like the swap as an example, okay, so we get a video to play right. You guys can't hear the sound that I hear, but you can see we have subtitles in here, and this is very, very good for you guys to use right here without leaving the website. Okay, so if there are any questions before we say goodbye, you guys are welcome to ask whatever questions you have. If there are any questions about anything that I said, feel free to write it down. Okay, so the question from Camilla. So, what do you recommend to trade? Camilla, I don't know if you noticed when I answered the second, sorry, the third question. Okay, it's not about me recommending anything to trade or not to trade. It's about you choosing the instrument that fits to your needs. So it doesn't matter what I would recommend you to trade. I can recommend you to trade just a random instrument here, and if you'll do it properly, you'll make profits with it. So I don't have anything specific to recommend. Do the process. You can get more inspiration in here. As I always show on the Market Buzz, you have different categories. You don't have to look only on stocks. You have here, let me show you in a moment, commodities. You have here currencies, cryptos, indices. You can get inspiration from here and read all about the news of what's happening worldwide and get inspired by that. Unfortunately, I don't have anything specific to recommend. I mean, I can recommend everything, but okay, I hope you get the point. Are there any other questions? I hope it helps. Besides that, are there any questions that you guys would like to share with me? Of course, of course. All right, so it's a pleasure. It's a pleasure. So guys, unfortunately, we're out of time for today. It's been a pleasure giving you the webinar. I hope that you could learn something practical for you to implement in your own strategy. You're all welcome to join us next week. Until then, I wish you a fruitful week. Best of luck with trading and have a good day.